Okay, so I just wanted to go over the changes that we have for the 2023 financial statement for the audited financial statements reporting packet. The biggest change is we do not want you to use your old templates. You need to use the template that was emailed to you. Included in this template is going to be some information for SBITAs, for GASB 87 information. And also, you need to make sure for GAAP and GASB purposes that you include all your unrecognized gains and losses on your investments. Remember, the deadline is October 1st. So we're going to go ahead and get into the meat of this. The biggest change that you're going to face is there's a tutorial on the new cash reconciliation. So if you want to pause this and look at this for a second, let me just go through this real quickly. I'm just going to read this. First of all, it's a reconciliation between the SKI's general ledger balance and final balance reported on the financial statements as cash and investments held by the State Treasurer's Office. We're doing this because we need at the Comptroller General's Office, we need to better document cash, and we need to better provide an audit trail between STO pooled cash and what the determined auditor adjustments are. So let me give you a background to this so you can understand why we're doing this. As you know, the Comptroller General's Office has gone through a lot of scrutiny this last year. We had a large prior period adjustment on cash, and one of the reasons why is we got tripped up on all the cash that was flowing out to the audited financial statement agencies, these lump sum agencies, mostly colleges and universities. So it's not the cash that y'all have is in question, it's how we were accounting for that flow from the state to the colleges and universities. So we need to make sure we're reconciling the cash in our system that we have for y'all versus the cash that y'all have on your books. So it's going to require more work on your end and more work on our end to make sure we are all copacetic and working together. Then you're going to also have to provide, in addition, it's like a puzzle. You're going to have one puzzle piece of your cash is cash and investments that you have that's at the State Treasurer's Office, and then you're going to have cash and investments that's held outside of the State Treasurer's Office. Together on the statement of assets, that's your total cash and investments, but you're going to have to break it out for us very cleanly between what's the treasurer's portion and what's held by your institution, your foundations, whatever. So how is this done? So first, you're going to receive a confirmation from the Comptroller General, and it's going to auto-generate from us, and we're going to send it both to your entity and to your auditors. So you need to keep us abreast of who you want us to send it to at your entity and who your auditors are. So this confirmation is going to look like this, and I'm going to show it to you in real life. So I'm going to first walk through the this right here, and then we'll do it in real life. So this is an example of a confirmation, and on this confirmation you can see right here we've broken out your business area and your fund, and here are your cash that we have. Now you're going to have a question about this. This is the pooled cash and investments balance at fair market value. So this includes the amount of cash that is in a bank on your behalf, plus the investment value at fair market value that is held at an investment institution. So previously, your entity would have gotten two confirmations to come up with this number. It would have gotten a confirmation from the Treasury Division at the STO, and it would have gotten a confirmation from the Investment Division at the STO. This is that number combined. But remember, it's at fair market value, so it's cash at a bank plus your fair market value. Now, the beauty of this confirmation here is it's going to be everything that's held at the STO. It's also going to be your composite reservoir balance as well. Now, this composite reservoir balance can be made up of multiple accounts, but it's just summed up here on one line item. And we have also found in doing our reconciliation that sometimes entities can have some investments that are held in the local government investment pool at the treasurer's office. So you may have some money held at an LGIP. So this is going to total up your cash and investment balance that the Comptroller General has on its books at fair market value. Now we've got some disclosure down here for you. It says that included in your entity's 27 million, so there's your 27 million, is 18,720,000 investments at fair market value. So what we're telling you is of this 18.89, the difference between that 18.72 is what's held in a bank at the treasurer's office, and the remaining, this 18.72, is the fair market value investments of it, and it's got a loss at $865,000 on it. So this value is we're putting a loss. We're already putting that fair market value loss in here, so we're already taking it into account for you. If you want to see a further breakout of this composite reservoir balance, typically Katrina Baker within the treasurer's office sends out a statement that's it's more detailed behind this, and you can compare that to that. So this is the confirmation that your entity will receive from us, and you should receive it by the second week in August. So what you're going to do when you start to prepare your reconciliation, you're going to copy and paste this value right here, and you're going to go onto your spreadsheet right here. This is the 2023 template that you've received. You're going to go under cash investments value, and you're going to paste it into this area, okay? And this total needs to agree to the confirmation. So your starting value is going to agree with our number. Now you may end up with a value per your treasurer's office cash on your financial statements that is different from our value. That is fine. We're not saying that you have to come up with, you have to report $27 million on your financial statements for state treasurer's cash, because your auditors can determine that there's all kinds of timing adjustments to that cash, particularly if you have a composite reservoir. You can have due to, due froms, you can have checks outstanding that you write on the composite reservoir, whatever. If you have any timing adjustments on that, that's where it's going to go right here. So once your audit is finished, let's just say that your auditors have determined that even though the confirmation comes through at $27 million, your auditors have determined they really believe that it's $23 million, that you guys really have $23 million in cash. Absolutely fine. You just need to detail which funds these timing adjustments happened on, and it needs to total, and then right here, this total cash per financial statement held by the treasurer's office, you have a line item on your financial statement where it's going to say how much money that you have held at the treasurer's office. It needs to agree. In previous years, this caused a lot of confusion for us because this number, we never understood how it agreed to this number. This is the number we had on our internal books. This is the number we would see on your financial statements, and we never understood the tie back. So we need to have it clear for our auditors, for our auditors' purposes, the distinction between the two. So y'all need to detail for us how you're coming up with the difference. We don't need to see the reasoning behind it. We just need to see that it has been detailed out. So here's an example for y'all. So here's the $23 million. So on this financial statement, it says South Carolina State Treasurer's Pool, and it gives $23 million. And it gives a cost of $24 million, but here's your market value of $23 million. So you can see that the two are agreeing. Okay, next section here is you're going to have cash that your entity holds that is separate from the treasurer's office. So this is going to be cash that's held at a foundation. This is going to be cash that that your entity has in their own bank accounts that has nothing to do with the state treasurer's office. So it's not going to be anywhere on that confirmation. This is something completely separate. You're going to detail it out here. You can detail it however you want. You can list it on various lines by bank. Or you can just sum total it. We don't necessarily care. It does not need to be by fund. But this again is cash that's held outside of the STO. And then there's a reconciliation here on your cash investments where it takes against your statement of net assets. I have statement of net position, but it really should be statement of net. Oh, excuse me, statement of net position. I'm sorry. It takes your statement of net position and it goes and looks at all your assets and investments and totals them up, because remember your statement of cash and investments does not care whether or not it came from the treasurer's office or it's held by you. It's just all your cash according to the various restrictions or how you have to disclose it according to GAAP or GASB. But here you're going to take on this worksheet, you're going to total up the treasurer's cash and investments plus the cash and investments that are held by your entity, and you're going to compare them back to the statement of net position, and it has to equal 0. So we're just making sure you've detailed it out and that it agrees back to your balance sheet. If it doesn't agree back to your balance sheet, you've got something wrong here. Then you have to do one more disclosure here. Your cash held by your entity right here, you need to make sure you detail it out according to the exposure of custodial credit risk, because we have to make on our financial statements, we have to aggregate all the entities, all the individual disclosure units within our CAFR or ACFR. We have to know the custodial credit risk and aggregate it for the complete disclosure. So you need to disclose this custodial credit risk for the cash held by your entity. And I give you a description of what each section means. And basically category A, B, and C has to do with your collateral versus the insurance. So just make sure you read this as to how you're going to disclose your cash held by your entity. And this cash held by your entity is different from your petty cash. It's the cash held by an entity that's in a bank, not your petty cash. And here is if you have any questions who you need to call and ask. David Starkey, of course, is the head of reporting. So if you have any questions overall, please direct your questions to him. My name is Catherine Kipp, and I am heading up the cash section. So I anticipate a lot of questions this year, and of course I'd be happy to answer any of them. James Torbert is handling GASB 87 and GASB 96 disclosure requirements. So if you have any questions for him, please feel free to give him a call as well, and he will be happy to help you.